Hello guys, welcome back to a new video. In today's video, I'm going to show you how I do my multi-timeframe analysis, my exclusive way of doing multi-timeframe analysis. So this is very an important matter and a big problem to a lot of traders, which is doing multi-timeframe analysis, trying to understand the timeframes altogether, whatever you're using, maybe 3 timeframes, maybe even 4 timeframes. So you're trying to understand the higher timeframe, the intermediate timeframe, and the lower timeframe. And that is mentally draining, right? You're wasting a lot of energy on trying to understand the market at any given moment. So you're actively looking at your higher time frame and then all the way to the lower time frame, and throughout the session your decision making ability is going to decrease, right, by time. So today I'm going to show you my way of doing it, and it might look, I don't know, maybe strange, but I encourage you to try it. And I'm going to show you how I do it and why I do it, the logic behind it. It's going to help you a lot in backtesting to collect data in a short period of time, and you're going to see why. And most importantly, in live trading. You will notice that if you try to use this way, live trading is going to be so much easier, right? And you will not have to understand what the market is doing throughout the session. You will only need to understand what the market is doing every now and then. So stick with me till the end, and don't forget to subscribe so you won't miss the upcoming videos. So let's get started. So from what we learned from, I don't know, YouTube videos, courses, books, we learned to do top-down analysis, right? Keyword is top-down, meaning we're going from the higher time frame all the way to the lower time frame and try to make or to find a valid trade idea. But for me, that's not optimal, and let me give you just a diagram here. So as you can see here, we have a higher time frame, intermediate time frame, and lower time frame. And we're gonna go from here, and then here, and then here, and trying to find trade ideas. That's how everybody do it. This can be, in my case, this is gonna be the 15-second time frame, right? To execute trades is gonna be my 1 minute, a 2 minute, or 3-minute time frame. And here there's gonna be my 1 hour time frame, right? I use the 1 hour as my ultimate time frame and general direction, so I don't find myself buying in, suppose I want to buy from here to take price higher, and then price in the higher time frame is here, right? And it is ready to start a new expansion down. So these are my combination of time frame. So the thing that I want to talk about is how we usually do it. Again, top down, we go to higher time frame all the way to the lower time frame. But for me, that's not optimal, and I tried something else. I tried going from lower time frame all the way to higher time frame. So I know that may sound again weird, but stick with me. So when we started trading, when we started learning how to trade, and I believe that's the case for everyone, what we were doing is we were constantly looking for patterns in the lower time frame, right? We didn't know multi-time frame analysis. We didn't know that we need to be aligned with the structure on the higher time frame. No, we were simply going to the lower time frames, maybe the 5, maybe the 1, and we're constantly looking for that shiny entry model, right? And sometimes we win, sometimes we lose, right? And we spend a lot of time doing that. So why is that? Because it's easier to look for patterns. That's how humans are programmed, right? From when we were kids, we like to look for patterns to match or to identify. And then by time, we realized that you need to use the higher time frame, right? In order for you to, I don't know, be with the trend, be with structure. And then we realize that's not enough. Lower time frame, higher time frame aligned, that's not enough. So we used the intermediate time frame to have the full picture, right? To buy at the right places. Although this is, I don't know, maybe trending to the upside, you don't just look for buys here. You need to be aligned with this, right? An example would be something like this. We are trading to the upside here. So basically here you're looking for buys, and you might see this setup here, and I don't know, something like this, and you want to take it higher. But on the intermediate time frame, we are doing this, and basically you're trying to buy here. You're to buy at the top of the expansion leg. So basically you want to look for retracement. So this is aligned, the intermediate time frame aligned, the higher time frame is bullish, and you get your setup here. So that's when you want to buy, right? So instead of doing this, what I did is I'm gonna stick to the lower time frame and the intermediate time frame, right? I'm gonna stick only to these two time frames. You're gonna use this later on. So here I'm constantly looking for patterns. Yes, I return back to the roots. I'm constantly looking for patterns here and only trying to align this with this. So simply I'm just looking for price to trending in one direction here, right? I need to see this directional. That's my trend following strategy. And here I need to look for a pattern like this. So I need to look for this pattern. This is a simple way to look at it. It has more moving parts, but this is the entry pattern that I'm looking for. And I need to see this aligned with the intermediate time frame, right? That's all what I'm doing. Just looking for this pattern in the lower time frame, and I need to be aligned with the intermediate time frame, meaning this is not happening in a downtrend on the intermediate time frame on the 1 minute. So this is a 15-second, this is the 1 minute, and this happens a couple of times between these two conditions. We are trending in one direction and we have this pattern on the lower time frame. For my case, it might be 5 times or 6, sometimes even 8 times, right? So I'm constantly looking for this. So when this patterns prints or starts printing, what I'm gonna do is I'm gonna go back and check the higher time frame. This is the only time that I'm gonna check the higher time frame. I don't check it the whole session and trying to understand these time frames working together all the time. No, when I see this, I'm gonna check the higher time frame. Check the 1 hour. Does the 1 hour agree on this pattern? And that's it. That's the question that I'm gonna ask whenever I see this. Is this happening? All right, I know that this is happening aligned with this, but is it aligned with the higher time frame? So how I use this, basically, very simple way. I'm either using the open, low, high, and close. Suppose we are in a bullish environment. I'm either using the high, or sometimes I use both of them. So the open, high, low, and close, meaning this is the beginning of the hourly candle. In the first minute or first few minutes, we're gonna see a move to the downside to create that wick. So let me show you here. For example, this one. So at the beginning hours or the beginning minutes, we're gonna see a move to the downside first and then the expansion. So I'm looking for this, meaning I want to see this happens after we created that wick, right? Or I don't want to see this happens before starting the new hour. So suppose that this pattern happened at 10:55, right? 10:55 a.m. So I don't want to participate in this because I know that we might get a push to the downside first when the new hour opens. When the new candle opens, we might see this move to the downside, and I'm gonna get liquidated here. So that's one condition on one filter for the higher time frame to bless my pattern here. Suppose that this happens at the middle of the hour when this already happened and we are already here at this body, at this expansion, right? So this is a valid trade for me. So this is just a few examples or few rules. I'm going to show you more in the video examples. Another way to look at it, this is happening at the top here. We are at 10:50 a.m., right? And we might get, a lot of times we might get that retracement to create the close. So basically the price here moves like this. This is the opening. We might get, and a lot of times we get this, like the wick, and then the expansion, and then creating the top and the last minutes of the hour, and then we get that retracement and then the close, and this will form in the bars candle, right? So here we go. I hope you can see it. So this is an hourly candle. You can see it here, open, low, and then high, and then the close, right? another condition or filter in order for me to know that this is valid. So this is all, it takes me like around 10 seconds, 15 seconds, maximum of 20 seconds in order for me to know that, in order for me to know if this pattern is valid and it is aligned with the higher time frame. Sometimes it's going to be this retraced back, or we did an expansion, retraced, another expansion, another pullback, and this pattern right here is basically happening here at the top, or potentially at the end of the pullback. We hit this zone, we have a good chance to start a new expansion. So again, this is not valid for me because the 1 hour is not giving me the permission to take it. So this is the easiest way to do multi-time frame analysis. You are constantly, or you are basically just sitting back and just looking for that pattern of yours, right? You're not draining mental energy, or there is no critical thinking here. You are basically comparing something that you have seen a lot, hundreds of times, thousands of times before. And that is a very, very easy task, right? You will find yourself more fresh even at the end of the trading session. You're not overwhelmed, right, by the decision making that you had to do. Once you see this, all you have to do now is to do that 10 seconds of decision making in the higher time frame. Is this valid? If yes, take it. If not, then sit on your hands. Sometimes it will work, although it is not aligned with the higher time frame, but the keyword is sometimes, and we're looking for more winners than losers, right? So think in probabilities. And in backtesting, that this is also going to help you a lot, because you're simply on the lower time frame, you are at having this in front of you, and you're constantly forwarding price quickly, and you can see this when it prints, right? You have seen it thousands of times. When it does, you stop and you go to the higher time frame. Does this setup aligned with the higher time frame? If yes, then take it. If no, move on. This is gonna help you to collect data more efficiently, and again, for live trading, also for psychological reasons. So I don't want to make this video any longer, so I have to postpone examples. I'm gonna show you a lot of examples of this, examples that both failed and worked. We might do a backtesting session using this multi-time frame analysis method. So I hope you like this video, and if you have any other questions, make sure to DM in my Twitter account or leave a comment down below, and I will answer you as soon as I can. Now, happy trading and good luck.